everyone. My name is Blake Stanfill, and I serve as the Chief Investment Officer for the New Orleans Startup Fund. So, the New Orleans Startup Fund is an early stage venture capital fund that's based in New Orleans, and we call ourselves the friends and family that you don't have. We are very early stage investors. We're typically the first check in a deal, and our goal is to get you ready for actual institutional investment. And so that's us in the startup fund.
Right. Cool. My name is Rohit Gupta. Just to warn all of you, I just had a lot of caffeine, so I'm going to start talking really fast. You can ask me to slow down at any point. I will try, but it's going to be hard. I run Future Communities. Yeah, there we go. I run Future Communities Capital. We're an early stage venture fund, mostly pre-seed and seed, a little bit of A, investing in legacy industries. Historically, I've said that, but honestly, within the last like 8 to 12 months, everything is legacy. So you can kind of invest in anything now.
Interesting.
Hi, everyone. Jared Quoyeser, Lafayette native.
Woo!
Across the board. And I think I was here for the first or second festival when it first started out. It was before I moved away. So
40th anniversary.
Now I'm dating myself. So a little bit of background on myself. So born and raised here. I spent about 23 years at Intel. My history in the kind of the VC world. I was part of our wireless venture fund, which was $200 million, and we looked at really accelerating in an ecosystem. I was running market development, worldwide market development for them, and we were looking at how we're investing in kind of the ecosystem to really accelerate our platform adoption. Then transitioned that to be within our healthcare division, and we had a venture fund focus in our healthcare. I had the opportunity to move back to Lafayette after 10 years in transitions and moving across with Intel. So I've been chairman of our Health Innovation Fund 1, Health Innovation Fund 2, so which is a venture capital funds within state of Louisiana, and excited to say that we've had our really kind of first exit with PHP, which was bought out from Boston Ventures, so which is super exciting to see that ecosystem really accelerate. And then now I'm a co-founder, managing partner of Louisiana Impact Fund. And Louisiana Impact Fund is a growth and buyout fund focused on growing, keeping companies, jobs, and wealth within the state of Louisiana. We see this as an excellent opportunity because we have, just like this room, the state of Louisiana is built on scrappy entrepreneurs that have built fantastic companies as part of that, and we want to be able to keep them here. We want to be able to grow them here, and when they're looking at their chance of where their legacy and how they're going to have their succession plan, and we want to keep them here, because when you look at growth within the state of Louisiana and the economic nature of that, it compounds within a community, and it's good for the community, and we want to be able to accelerate for that.
I love that, and congratulations on launching that fund. Are y'all going to be making an announcement soon in terms of first deal?
Yes,
okay.
We will.
Awesome.
Yes.
All right, so look forward to that, right? Blake, we're going to start with you. Rohit, I'm going to get to you in a second, but I know that we're going to be talking a lot about the Gulf South region. And so I'm going to let these guys lay the groundwork, and then I definitely want to get your perspective because you historically like to invest in startups in more flyover states or outside the areas. Right? So Blake, the New Orleans Startup Fund is handling the Louisiana's seed stage SSBCI fund. And so you really are, like you said earlier, you're typically the first check-in. Okay. So what are walk us through if a startup is in the room right now and they're ready to raise their pre-seed round and they say, okay, I need to go and apply for that. What are the things that you're looking for? What are kind of like the minimum requirements?
Absolutely. So we invest in venture backable companies. Scalability is really chief amongst the criteria that we're looking at as we're thinking about whether or not we're going to make an investment. Now, what that means for the startup fund is that what makes us different maybe from a national investor or other funds within the ecosystem is that we're able to actually we can lean in and take some risks early on. So we're going to take a look at founders when they're early in their traction journey. We're going to invest in teams that may not have as much experience yet in the particular venture or company that they're working with. So we can lean in a bit earlier, and we have a higher risk tolerance there. But we're really looking for companies that can really be built and have meaningful presence in Louisiana, but be scaled nationally and beyond. That's what we're looking for.
And so what are the typical check sizes that you guys are cutting? Like, kind of walk us through. We'll dive more into safes and convertible notes later. I would definitely, that's something that our founders have requested to talk about. But I know that y'all are one of the few funds in the state that actually will look at a safe.
Yes, and so we are, again, we're industry and sector agnostic. And in terms of check size, we're going to write a check up to 100,000. And again, we are friends and family that you don't have. So this is going to be that first little bit of capital that you can use. And the last panel, I think, showed that you can actually take some of that money and go a long way with AI and other resources. You can stretch that money a little far now. And so, we have a mandate. We're looking across the state for deals, and in our pipeline, if you just want examples of type of things that we've looked at recently, we have some B2B SaaS companies. We have some climate and energy plays that have been interesting, and then there's been some innovation within legacy Louisiana industries that have popped up that we've been taking a look at as well. So we're across the board. I mean, we're looking we're casting a wide net, and we want to attract, again, companies that can be built here and scaled nationally.
Jared, what are you looking at whenever, I know I've introduced you to a few startups already, right? And so let's walk through, what are you thinking whenever you meet with a startup for the first time? I know that, and I appreciate this about you, is that you are always willing to meet with them before they're technically ready for the impact fund. But walk us through, what are you looking for? Kind of how are you deciding whether or not it's something that you would go after?
Yeah, Destin. So if you look at the Louisiana Impact Fund, we're not venture. We are a lower middle market growth private equity fund. So we are looking for, positive EBITDA. We're looking for a scalable organization. We're looking for growth. We're looking for a strategy where growth equity can put into place and really accelerate the company's business model so that they can continue to scale within the state of Louisiana. And then also too, when I look at this, I'm looking at the founder, what is their track record, all the other things, type of thing. But when you look at those things, I think within the state of Louisiana and over the past 15 years, we have done an excellent job of really building out the venture ecosystem. If you look at the numbers going back into 15 years ago, what was in place to what it is now, it is actually really, really exciting as part of this. And then when you talk about the flyover state perspective, I don't know if anyone has heard the term the boom belt. Anyone raise their hand? All right, so the boom belt is the southeastern United States. It's about $9 trillion of GDP. Outside, in a worldwide basis, it is probably the second largest economy. It is, look at the U.S. across the board. When you look at the population growth, 70% of the growth is heading into the southeast. And guess what? The state of Louisiana is centric to that. We have unbelievable assets in the state of Louisiana. And I feel that we are on the precipice of a major growth curve and really being a key component within that boom belt. If you look at Texas all the way to Florida, up to North Carolina and Tennessee, I feel that I'm bullish, we're a sleeping giant.
Love that. Absolutely love that. Rohit, okay, so you've invested in companies like SpaceX, Grok, all right.
None of that is real until the money hits my account.
Yeah.
I cannot live in that world.
There you go. I love that answer.
But if you're buying, I would sell on the secondary.
All right, so when you look at, let's talk about the startups that are I hate using the term flyover state. In fact, there was a group that used to call themselves the flyover state, and then they change the entire name because everyone's like, let's stop being so pessimistic, right?
Was that Kansas or Missouri or what?
No,
was
no,
it?
it was multiple states, but it was like a big Slack channel and everything. So, yeah, I forgot what they named. They changed the name to. It was recent, but when you're looking at startups in those areas, what are you looking at in order to feel like, okay, that's worth my attention?
Well, I would take a step back, and I'm born in San Francisco, grew up there, lived in a few places, in the world in my life, and at some point in my career in venture, and I've been doing this for a minute, I just sort of looked around the valley, and I realized that nobody in the game is actually from here, right? Here being San Francisco, Silicon Valley, whatever. We're all from somewhere else, and a light bulb went off in my head that if I can find founders before they move to the valley, I'll win, right? These are all really smart people that are gonna move to San Francisco or Palo Alto or whatever for talent and capital. If I can sort of bring them the capital before they move there, right? I'm getting in at a better valuation, I'm getting in earlier, I have a little more effect on the company. All those things are true. And there's another side of this where I personally believe that like founders come in all different stages of life, right? And it shouldn't just be, well, I'm 24, I'm gonna go build a startup, I'm moving to San Francisco. Because a lot of us have partners, kids, whatever, and the idea of like picking up our lives and moving somewhere else just isn't really possible, right? If I had to move, like I got 2 kids, not gonna happen, right? And that goes for a lot of founders. I think it's important to say like, you can stay where you are and build a company, especially with AI, right? Like for 10, 15 years now, everyone's talking about the 10X engineer, the rockstar engineer. Nobody really says that anymore, entirely because of Claude Code. You don't need to go to, like, look, if you're starting an AI research lab and you need top quality AI researchers, fine. Move to the Valley, burn $1 billion to train your model. Otherwise, you can probably just Claude Code this at home.
Love that.
I'm not sure I answered your question though.
No. I love it because you actually brought up something that I've heard founders that we've worked with struggle with, and it's definitely something that we have a strong understanding that a lot of the founders that come into us when they start working with us, they're really looking to help them de-risk what it is that they're doing because they have a family, they have a nice paying job already, they have a mortgage. Like I have this idea, but man, the fear of it potentially failing is really holding me back. So, but the thing is that a lot of our founders that go and start to raise capital from investors, they feel like there's some sort of negative connotation that they haven't quit their day job yet, right? They have multiple kids, and things like that. So you brought that up, but is that something that in your perspective that you look at all, or is it purely about other aspects of the founder?
Yeah, I mean, it's important. Look, just about every rule I've ever had about investing, I've broken. Okay, I think the only rule I've never broken is I will never invest in somebody I do not like. You are a terrible person. Don't even bother. Right? True. They will make a lot of money, but it's not for me.
Yeah.
Look, have I invested in founders with families, kids, whatever? Yes. Have I? 100%, right? Have I invested in parents who are saying, well, I can't quit my job because, I have to pay my mortgage and private school or whatever? Yes. But it has to be very clear, like, look, you need a little bit of money to get going. And at some point, that job has got to, you got to pick a lane, right? Do I mandate that? No, it's kind of a conversation. I do know funds that do mandate that. I'm not investing until you quit your other job. That's fair. Do I think that the founder necessarily has to quit their job? No, there's other capital out there. But look, in today's world, right, if you get $100,000 from Blake, you can go really far, right? You're not like, well, I need $3 million to go build product. You need $100,000 Claude Code subscription and go to market. That's all doable within a month, right? If you're not moving that fast, somebody else is.
Love that. all three of you have sat through hundreds, maybe potentially thousands of first-time meetings, right? I've sat in some of the first-time meetings with Jared, so sometimes I see the look on his face and I'm like, what is he thinking right now? Is he hating me for making this introduction or what? But Blake, I want to start off with you. What do you look for in the first 5 minutes? Like, does it ever occur to you in your head that this is going to be an absolute waste of my time? And if so, not to call anybody out, but what's some examples of what happened that caused you to think, oh, this is going to be great or not?
Yeah, I'd say that there's a couple of things. I'd say that one, for founders, the bar is actually higher than you think it is, and it's both higher, but it's also accessible to clear. I mean, we're looking for standard things, right? Like clarity of problem, clarity of who the customer is, having a strong conviction, and I think the best pitches that I hear are ones in which there's a feeling of like inevitability, where hey, listen, there's this problem, there's a solution that's coming, and I'm the best person or right now, me, this team, with this solution at this moment in time is the best way that this problem is going to be solved. Those are the pitches that excite us, that make us feel like, okay, we want to be a part of this journey. So early this week, I was at a pitch competition, a high school pitch competition, for my 16-year-old son was in. And as I sat there, a couple of things came to mind. One, that the gulf between high school pitches and some of the pitches I see is not as wide as I wanted it to be. The second thing is that these high school youth were hitting on the notes that we wanted. Many of them were hitting on the notes that we want. They felt really passionate about their solutions, whether it's a app that connected you to cookies, but they were really passionate about it. They had really clear who their customers were, and why they were best positioned to solve it. And so I'd say that while that bar is high, it is being accessed and cleared by even youth. And so I would just encourage founders to have high standards and be very, very, very clear about problem, your story, your customer, and why you.
Jared, so let's move over to you. Whenever you're in these first-time meetings, what information are you hoping you walk away from to know whether or not you want to move forward?
Yeah, and Destin, I think when you said the first 5 minutes, and I would say it's really the first 60 minutes, because your first time meeting, it goes up and down across the board in regards to the positive and negatives and everything, because no one's perfect. No one's perfect from their skill set and their background and what's coming to, to the table and everything. So it's really, it's that up and flow. And, really one of the things that we look at, does the individual, have the subject matter expertise within the industry and really kind of knows what the house rules and how to be successful within the industry is one thing. I'm looking at, do they come from an operator perspective? Do they know how to scale? What have they done before? Those types of things. When I'm sitting there, I'm trying to get my head wrapped around what type of resources can I activate to help this individual to be successful moving forward, because I come from a chief revenue officer perspective. So my latest role at Intel, I had about a $6 billion book of business and, hundreds of employees. So I'm looking at kind of what are the foundational elements that we need to put in place for this individual to kind of be successful. So my role has kind of shifted from the VC perspective from lower middle market private equity, because we're looking for individuals, we're looking for operators, positive EBITDA, they've got a moat, they've got a growth plan, and they can execute and scale at a high level. So those are the types of things that I'm looking for. When you talk about, kind of the markets type of thing, Destin, I'd rather have someone that has a market, $200 million that they're targeting and get 40% of that than a market that's $2 billion and they're getting less than 1% of that. So those are the types of things that I'm looking for as part of this. So hopefully that answers.
Yeah, absolutely. Rohit, you have some thoughts?
Well, obviously the first thing is, do I like this person? So part of that conversation is, do we get along? Do you listen to me? Do I listen to you? And it's kind of messy, right? I think that like a lot of VCs want to see everything perfect. It's the pitch is good, they know it, and I'm okay with the ugly pitch deck and the typos and stuff because to me it's like I want to hear 1,000 different things and then let's hone in on the one little thing that's valuable, right? Because as a founder, you may not know, right? And just that willingness to sort of work together because I'm investing super early and for me, like I can't fall in love with the product because whatever you pitch today and whatever you end up going to market with and whatever you end up winning with, there are 100 pivots, 1,000 pivots there. So it's like I'm investing in you, and if you and I don't really vibe, then it's not going to work. And look, I will tell you something interesting. I don't know if you heard Amantha's panel earlier, right? But she was saying that she's not a salesperson. She's not walking into a pharmacy and walking out with a contract. But I'll tell you the truth here is that she's the only person that can build that company, right? She can walk into a pharmacy. She knows exactly who that person is because she's lived their life. And she will walk out with a handshake and a smile. I walk in there, let's say I said, I'm gonna copy your company, I'm gonna vibe code the hell out of that. And next week, we're going live. I walk into any pharmacy, I promise you, they will say, you are a suit, I do not wanna talk to you, right? So it's like kind of like, I want someone who, this is their life's work. This is something they're passionate about. This is something that they're the only person that can solve this. Because there's no other person who could do what she does. And I know because I've been looking at that market for a long time, right? And I think if you know Hustle Fund, they're a fund out of the Bay Area, probably some of the most insane investors I've ever met. Like they will pledge whatever, they will commit to a deal over a phone call. Like so insane, You're on the call with them within like 30, 45 minutes. They're like, oh, you want $150,000 to do this? I've seen it, I've heard it, like they're wild, right? But they talk a lot about like mercenary versus missionary. And to me, there's nothing wrong with being either of those. A mercenary, you're gonna go in there, you're gonna solve something just to make money and get out of it. A missionary is, I'm changing the world, right? I wanna see pharmacies operate better. I wanna see revenue management, inventory management. I wanna see like independent pharmacies survive because that's my life's work. Does that make sense?
Absolutely.
I got a question. Do you like Destin?
He's an alright dude.
I'm just making sure.
Yeah.
Okay, all right. Is that how you?
Do any of you guys like me?
I don't know.
He hasn't asked me for a check yet.
Yeah. No.
I'm never gonna figure this out soon enough.
Yeah. After he gets to attend festival tonight, he'll be like, dude, thank you. You're awesome. All right. So let's kind of get back into kind of getting into the weeds a little bit. I know it's tough too because, Rohit, you said yourself, you've broken almost all of your rules about things. So I know it's kind of hard to like give definitive answers on some of these things. And it does ultimately, and I love that you said this, Rohit, because I feel like all three of you, I feel like you embody this as you really do care more about the founder, than an overall business. And you're betting on the jockey, not the horse, so to speak, right? And so when the jockeys want to know, though, give us definitive answers on things, right? So let's go back into, you brought up market size. Right. So I would love to know how each of you think about when you get to that market size slide or when you hear the founder talk about their market size. We all know that it's a ballpark, guess, but it needs to be an educated guess. So like, can you walk us through what you believe an educated guess actually sounds like versus, oh, you just pulled a number out of thin air?
Why don't we start from the venture perspective and then we'll get into the kind of growth equity.
Let's do that.
Private equity perspective. Blake, you want to start?
Yeah, I'd say that similar to what Rohit was saying a moment ago, we know that whatever is on that slide on market size it's funny math, right? And everyone is kind of just guessing and putting stuff together. We do like folks to show their work a little bit. We often refer to ourselves as opposed to being Shark Tank, we're more like Dolphin Tank. So we're very friendly, but we do want some rigor. behind whatever it is that you're putting forward. That being said, like having a small addressable market or a niche is fine. At least in the initial conversations that we're having, as long as you can point towards how this is going to grow and scale beyond a niche. Like we understand, if as a matter of fact, if you came to us and said that you're going to capture 20% of a $2 billion market, and this company's been going for 6 months, we'd probably like put you into that unrealistic category or founder that we don't get along with category, right? And so, because this is not based in reality. Yeah, and so we wouldn't appreciate that. What we would appreciate is a realistic, a rigorous, thoughtful approach to sizing what your initial market might be. And we know that's going to shift over time, and we're willing to go along with you on that journey.
I think market size is, there's part of it is this the entirety of your business, or is this your first product and it's a wedge into a larger market, right? So that's part of my thing, right? Like I'm going to sell something at most is worth $150, $200 million. Okay, where else can we go from there, right? And if you could sell let's say you built a company worth $200 million and you sold it for $200 million. I'm an early stage investor. I'm probably happy with that. Your later stage investors probably aren't. So to some degree, market size kind of is important to the next guy, and it'll define how your capital sources and how much capital you can raise in the lifetime of that. I like to know, I want to understand all these things. Part of it is also your thinking. I don't really plan on growing something very large. I'm probably not the person to talk to, right? What else would I say about market size? If you have the opportunity to sort of go further about like product A, product B, product C, that helps with trying to get me to understand where this goes. It can be hard, but if you're going to have to build more than one product, right, or additions or something else to your product. I think that's it.
Yeah, Jed?
Yeah, definitely. So I take a look at it from a different lens, and I've seen so much in regards to market size, and I'll put it in for my Intel hat on, is like you come in for your product line business plan, and the market is 1 trillion people. And I was like, really? There's not 1 trillion people out in the world at this point. But then, it's when we look at it from a Louisiana Impact Fund, we're actually looking at this. I'm looking at this from a chief revenue officer perspective, is what is the addressable market? How can we influence that market? How can we actually accelerate that individual through the sales funnel from contact, marketing qualified lead, sales qualified lead, and how can we actually convert that individual to be a customer and a convicted customer for your product and solution and services? So when I'm looking at this, I'm looking at it more of a very, very prescriptive perspective and trying to identify the persona for that individual in regards and try to fit it in a market lens that way, because I'm getting into the mindset of really is that how are we going to activate? How are we going to deploy capital that we're going to activate? How we're going to deploy capital where we're going to accelerate your business model that's going to outpace the market growth rates of what you can do on your own. So from a market size perspective, I'm getting a little bit more into the weeds in regards to what's out there.
Okay.
I just want to note that I think Rohit and Jared's answers really highlight the fact that I think founders really need to think about whether or not their business, what type of capital is right for their business. And not all businesses are venture scalable or just venture-backed companies. Some are better suited for Jared in growth capital at some point. Some just don't need it. I mean, like there are, we've had plenty of examples of companies that we've come across that, to Rohit's point, like founder just decided. We had a 24-year-old guy come to us with an application that was helping fraternities manage their roster in college. And yeah, he just went to a few colleges in New Orleans and Louisiana. And then he was like, well, actually, maybe I don't need venture money for this. And sat on that, grew it, and sold it for $50 million. Now, he didn't have to take on venture for that, right? Now, the question is like, that wouldn't have been exciting for Rohit's fund, right? That kind of story just wouldn't be as exciting. It wouldn't have been helpful, even the capital that he could have received had he taken it on. My point in saying this is that like not every business is venture scalable, and that's fine. You have to be thoughtful about appropriately finding the capital sources for your business at the stage that your business is in. So
Just okay. Now we're getting into debates here, but
There we go. Love it.
let's put it like this: if I invest in your company at $5 million and you sell at 50, I'm probably happy with that, right? Like a 10x sounds great, but unless you've done it before, you have no idea how to go from 5 to 50 and sell. Selling a company is really hard. Selling a company for $50 million is really hard. Selling it more than that is harder. Building a unicorn, IPOing, those things are impossible. And so when somebody, if you're a founder and you come to me and you're like, I'm going to grow a unicorn. Okay, have you done that before? No. Then don't think you can, right? Like it's you cannot reverse engineer the process of building a unicorn. You can, even if you have an advisory, like murderer's row, they cannot get you to do it. It is the impossible. And so I think being very practical about what you can do, almost to the point of just not saying it. This is my TAM, I'm gonna go attack it, right? Saying I'm gonna sell this thing for X dollars, I think they're the sort of mercenary or whatever the outlook of like, I'm just gonna grow this big enough to sell it. That is something repeat founders say because they know that the unicorn IPO thing is a pipe dream, right? I'm okay with that. Saying I'm gonna build a $250 million company and sell to Intel, good luck.
All right, so since we started to touch on things where there might be a slightly different opinion, something that's come up multiple times from founders that we work with is the debate around safes and convertible notes. And Rohit, we talked a little bit about this, but let's start with you. I'd love to know from each of you. Well, I kind of already know your answer because where you're at in the pipeline, but safes, convertible notes. What's your opinion on both of them?
So and like the sort of the three-legged stool here is convertible note, safe, price round, right?
Just for the folks that don't know, could you explain what a safe is?
Yes.
Yeah,
Great.
SAFE is Standard Agreement for Future Equity. It was created by Y Combinator back in like 2017 or 18, something like that. It is basically like, I'm an investor, I sign a piece of paper, I wire you money, I have no rights. You can do whatever you want. I do not have information rights, I'm not on your board, I cannot force anything, I just sit here until you do something, right? And like, the horror stories that investors, probably rightly so, are afraid of. Like I had a friend who built a business that's probably like 8 or 9 figures, raised 1 round of capital on a safe. Those safe investors have been sitting there 11, 12, 13 years, and they're like, what's going on? He's like, nothing. No dividends, nothing. Is he wrong for that? I don't know. He doesn't owe them anything, Would it be nice if he gave them some money? Yeah, probably, because he's cash flowing like crazy. But, the world is the world.
Yep.
I don't really care what you do. If you come to me and say, I have a convertible note open, great. Safes are bad for my business, they're good for yours. Convertible notes are a little better for my business. Price rounds are great for my business, they're bad for yours. Okay, price rounds are slow, they're difficult, they're very expensive. Even if we were just the most vanilla price round, right? You and I agree right now, basic, middle of the road price round. You're paying for both attorneys and they're gonna argue for months to justify their fees. So like 50 to 75K out the door immediately. That's not even like IP diligence. That is just contract negotiation. By the way, all the language is already written in its boilerplate. So what are they arguing about? Nothing. Probably where to go for dinner, you know, or which college they're sending their kid to. And a convertible note is, you know, you have a little bit of rights, you get some interest, they're fine, they're kind of outdated, there's a little bit more negotiation and arguing. I'll tell you I'm taking all the air, but one of the dumbest stories I've ever heard, or was part of, like, I invested in a company, and then he's like, hey, I got this other investor, he wants to do a note, can you talk to him? And I'm talking to this dude. He's like, yeah, man, I got a convertible note, and the founder said 7%, but I really want it. And I was like, bro, if that 1% makes a difference in your business, you need a fixed income strategy. You need to get out of venture. This is just nonsense, you know? And I told the founder, he wants 8. What are you gonna do? Do you really care? Right? And so a safe is just straight. I'm screwed, whatever, you know? But look, safes are the way business is done in the Valley. Nobody does notes, and for early stage companies, very few funds do price rounds. Some of them do because it's their thing, and they try to make it super fast and cheap to do it. God bless them. If you think you can, if you're gonna do a note, I'm in Louisiana, I'm gonna raise on a note today. At some point, you will probably need to leave this state to raise money. And if it is on a price round, great, the note doesn't matter. But you might get somewhere to another state like California, and they're like, well, we do safes. And you just have to think about your capital that way. If you're at some point going to have to start raising money somewhere else, is this going to be a problem for the other investors? Now, if somebody came to me with a note, said, I've raised $1 million on it, I need my last 250, whatever, sure, don't care. There probably are funds that would say, I don't want to do a note. Because, I mean, the bookkeeping for me is, I don't want to do it, you know?
I want to add to footnote to what Rohit said is that when he says leave the state to go raise money, it just means leave, go get money, come back.
Correct.
Don't move.
Correct.
Don't move.
Stay here. It's way more fun.
Blake, what are your thoughts on Say's convertible notes?
We had a strong opinion that we've been disabused of. So we almost exclusively did safes for a number of years. And again, like the ethos of the startup fund is really one that is founder first. I mean, our goal, probably should have noted this in the beginning, is that the startup fund is actually a nonprofit venture capital fund. So it's evergreen. So all of any returns that we get go back into the fund for us to invest in other Louisiana entrepreneurs. And so our operations are funded philanthropically. And so my point in saying all of that is that we're different from other fund managers or typical funds in that way, where we want to, our mission was to grow entrepreneurs and entrepreneurship in Louisiana. And so we were founder friendly, very founder friendly, in which we did safes almost exclusively. And as we transition, as the state has the state is our main LP, our main investor, there's been a shift in the approach in how the state wants us to and wants funds around the state to uniformly invest. And so that has shifted more to notes. I'd say that broadly speaking, I think Rohit's comment is important. The decisions that founders make early on, like right now, actually do like who you hire, the story you tell, how you structure a round. Those decisions do have large impacts on your future ability to grow and scale your business. And so just encourage you to just be thoughtful about an approach and beginning with the end in mind as you go through your fundraising journey.
Right. I want to get into, it came up earlier, clearly preparation, because first impressions are key, right? But something that we've seen that's come up a lot is maybe lack of preparation in the data room, like what they're preparing to provide to the investor for additional information outside of what they're talking about. So, Jared, would you like to touch on what you're looking for whenever, if I send you a data room, what are you hoping is in there? And so that way you feel like you have to continuously ask for something new, right?
Yeah, I've seen some great data rooms, all the bells and whistles, the latest technology and everything, but the meat is not in there.
Yeah.
Type of thing. So I'm sure we've all seen it before. So when you get into the data room, so we've already seen the deck. We've already bought off on it. We want to have the next level of conversation in regards to it. From my perspective, growth equity and buyout capital, we want to see a little bit more on the operational side and everything. We want to be able to see financials, and they don't need to be audited, but, they got to connect to the bank statements, that type of thing, so we've got to get those things going. I want to see a strategy in place. I want to see a strategy in place that shows that the individual knows the market and how to influence the market and how capital is going to be deployed to really outpace growth rates that they would have without growth capital in place. I want to see operational excellence in regards to this. I want to see how are you operating your business from a CEO perspective. One of the questions I'll ask is, hey, what is the latest fire you had in your business, and did you address it? Are you the one that addressed it, and do you know the problem? That kind of what was going on. From a CEO perspective, do you know the numbers better than your CFO? Because guess what? I want you to understand every single penny that's going out the door, because it is your dollars as part of it. I want you to see in the data room that you have complete control of your business. You're not just a networker out there, CEO type of thing, but you're actually deep into the business, and you can be back to really scale this company moving forward. So when you look at those types of things, really, I'm looking for operational excellence, and really, is there a platform in place? Is there a pillar in place where we're going to put growth capital in place that's really going to accelerate the business model moving forward?
Right. Rohit, what does data rooms look like for the earlier stage?
Yeah, I don't think I invest as often and as early as Blake does. But if you're a pre-seed or seed company, what can you really put in there?
Yeah.
You can put in a bunch of garbage Excel that you don't even believe. Cool, But look, I think
like your TAM.
Yeah, right. Here's our 5-year model. You don't even know if you're alive in 5 months. What are we talking about? Whatever you got, make it clean, make it easy to understand, make it readable.
I'm sorry, that part, just clear. If it's easy to access, just easy to navigate the data room, that in and of itself, as early as we are, that's the win.
Yeah. About how long, let's say you get a pitch deck, you haven't spoken to the founder yet. Do you look at it? I know that you guys have an application process, but do you look at it? And then about how long do you look at a pitch deck before you decide whether or not you want to continue or move on to a conversation?
I guess it depends where I got the pitch deck from.
Yeah.
And look, I'm kind of a sicko. I read everything. I don't even like your company's name, but I'll read it, Yeah, look.
So Rohit's got to like you. So to get to the next step, name.
Don't ever cold email a VC. We don't. It goes nowhere, right? I get 100 to 200 cold emails a day. I cannot read this stuff. It's just impossible. So it kind of depends where it comes from. If it's cold email, I may read it just for fun and be like, oh, it's too bad. If it's from a founder, a good friend, whatever, a colleague, yeah, I'll probably take a couple of minutes, but I'm not spending hours. I'll see, I got this one deck. I loved this company's idea, but the deck was just paragraph after paragraph. I'm like, bro, you're at seed stage. You shouldn't have this much thinking into your company. It was unreal. Yeah, so it depends where it comes from, depends what they're trying to do, depends Yeah, the data rooms is kind of the same way. Look, what you're gonna run into is that nobody reads anything anymore, right? And that kind of will push into, well, I should add more content. everyone is going to dump your deck and your data room into Claude and ask it what I should do.
Mm.
Right? Not saying I'm out of a job soon, but yeah, I'm probably out of a job soon.
Yeah, I'd say so. For us, we receive a bunch of, we source from cold, just from folks submitting applications. So we have an online application that you can submit a deck to. Myself, alongside our CEO, will take a look at it. We just divide them up and read through, and then decide if we want to come in for some type of intake. What we're looking for on that cursory read is probably not dissimilar. Like, do we like the name? No, less name, but more.
They're gonna
really,
grill you for that for the rest of the day, Rohit.
Really good metric.
yeah. No, we're going to be looking at again the basics. Is this a real problem? Are they providing a solution? Do they have customers? And why this person or team to solve it? That's what we're looking for. And if it's a thumbs up, if one of us says yes, then we bring them in. If both of us are no, then we send a thank you for submitting email. If we can't really decide, we'll probably bring them in, because we're screening, we're having intakes probably 3 to 5 times a week. So that means we're looking at 200 companies in a year, roughly. So we're having 200 conversations at least. So we know that we are at the top of the funnel.
Yeah.
For the venture landscape in Louisiana. And so that's a part of our mission to do so.
So, Jared, I'll start with you for this question is, because this was kind of alluded to, is, well, how do I get in the door? Like if cold email is not the best way, right? A warm introduction is needed. Let's say somebody doesn't know you, you don't know them. What would you recommend they do in order to be able to get your attention?
Destin, like, I think there's a track tomorrow. There's a presentation on network, right?
Yes.
Okay. My recommendation for any founder: invest in your network. Invest in your network.
Thank you for promoting that panel.
Invest in your network, because your network is going to be a phenomenal resource for you. It's going to be a phenomenal resources for customer opportunities, for investors across the board. If you can get out there and be able to invest it and create that, and that value creation and value exchange within your network, it's going to pay dividends X-fold moving forward. I've seen it play out over and over again, because a lot of times where this comes is, so I had a conversation within my network. It comes in from a person that I know and say, hey, JQ, we need to have a conversation with these guys, because they're going through a succession planning, and they want to keep their company within the state of Louisiana, and they want to keep their employees within the state of Louisiana. So it came through the network as part of it. So build that network so that actually you can have that to provide those introductions as part of it. And, a lot of times you're going to have to get in rooms that you feel that you shouldn't be in, with investors as part of it. So be able to, suck a little pride, and the doors are going to close as part of it. Be able to get through that, which is super important. I would say for myself, I'm usually very open in regards to get with me. Destin, he knows that, always want to meet with people, always want to provide coaching and, how we can help them be successful moving forward, which is a key thing. So I think for you guys, it's probably a soft, it's a warm introduction when it comes to it, for that. But for me, it's, I'm pretty much an open book in regards to it.
Yeah, so the cold doesn't work. I can say in my career, I've been doing this since 2008. I've invested in 2 companies I've cold emails. It's statistically the worst thing you can do. You're better off. I'll tell you, you're better off. I once had, there's a coffee shop, a chai place in Berkeley I take a lot of meetings at, and I'm there once, and this kid from Cal, college student, sophomore, 18 years old, I'm in the middle of a meeting, comes up like, hey, are you a VC? I'm like, yeah, beat it, like I'm talking, you rude little, but whatever. I was like, here's my email, contact me. That is the weirdest thing anyone's ever done. It'll never work again. Like, it was so patently rude, It's a warm intro, but it's such a specific art, because let's say you want a warm intro to a fund that has like 3 partners, okay? You're in the gaming industry. There's a gaming partner, there's a healthcare partner, there's a fintech partner. You want an intro to the gaming partner because a health tech want to be like, oh, this is cool, and then throw it in the trash, right? Okay, your warm intro to the gaming partner has to be from a founder. Okay, if it's from a VC, let's say I send it to the gaming partner. What's the first question they ask me? Did you invest? If I say no, well then why would I invest, right? If I say yes, they're like, oh, you're just shoveling your garbage over here, you know? It has to be from a founder. The founder doesn't necessarily have to be in the same industry even. They can just say, look, I don't know what the heck this product is, but I can tell you this team is killers. They're gonna do this thing, right? And the founder that makes the introduction should be somebody that made that investor money. Getting the dude who lost me a ton of money, right? It can happen, but like that person's judgment's questionable.
Yeah.
So get somebody who made the money any point in their career, because like people bounce around between different funds. So this is a lot of work. It really sucks. Like I will not underemphasize that. This process sucks because to close a round now probably takes about 150 first meetings. First meetings and then second meetings, whatever investment. It is a bunch of crap. To get 150 profiles for meetings probably means what, I don't know, 300 to 500 investors you have to actually look at. And you have to do all this nonsense, garbage research on them. And like, you know, it's tough. I'm a little easier. I got 152, probably about 150 founders in my career. Any of them ever makes an intro, I will take it. But I'm an easygoing person who seems really intense. You got to go through this process. There's a really good book, Fundraising by Ryan Breslow, Breslow. It'll take you an hour and a half to read it. It is the best tactical guide to early stage fundraising. I tell every one of my founders to read it. It'll just put you, like so much of the stuff you're going to go through or are going through, he's just telling you this is what's happening.
Blake, you have anything to add to that?
No, I think we covered our process.
Hey, Destin,
submit it on our website, and we'll take a look. We'll go from there.
But if somebody back channels, right?
Yeah, no, listen, there's a ton of value to networking, right? We often get, we're looking at, as we're expanding across Louisiana, more of a hub and spoke model where we're receiving from Opportunity Machine, from Ochsner Ventures, from Idea Village, from Nexus in Baton Rouge. We're getting referrals from all of those different entities for us to take a look at investing on behalf of the state. And so, yes, it does mean a lot when John Atkinson says, please take a look at this deal, or Destin says, take a look at this deal. It means a lot more than us reading your code submission online. So that wasn't to discount the power of networking and who it comes from and whether or not, we believe in, the whatever analysis or incubation or support that you've received from the partners that we have from across the state. So it definitely means a lot to come pre-vetted or invested in, and it could be investment in terms of coaching, investment in terms of being a part of a community, or even better if they've given you money and we're like, hey, listen, can you come in on this deal with us? That's even better. So.
Sure.
Hey, just one other thing. I just want to kind of reinforce and amplify the networking piece. So we are launching a CXO training program that will be announced. The first week in May. It's a 10-month cohort program that we're looking to identify 10 to 15 individuals that we'll have as Louisiana Impact Fund CXO program to reinforce and amplify networking, the network components, and how you build that has a equity valuation for your company is a pillar of that training program. So again, invest in your network. It's going to pay dividends now into the future.
Yeah, I love that y'all are reinforcing that because tomorrow's panel was really spun up from data from the Knight Foundation was one of the foundations that ran this, but I think they surveyed and looked at 66 startup ecosystems and looked at all the different metrics, access to capital, talent pipelines, all these different things. And the one metrics that they measured that as they saw more success in the communities go up, this one metric always went up, was connectivity, which was, and they measured that by measuring the founders' sense of connectivity. Did they feel connected to other founders? Did they feel like they knew who the investors were? Did they feel like they knew how to reach out to them? Did they feel like they knew all the resources, incubators, accelerators, people at the university, et cetera? And so that just, for us, we feel like that is a big part of what's ultimately going to help you have the best odds of having success, is ensuring that you're building that village with you, that startup friend set, we like to call it, early on, so you can expand your network and get access, and hopefully be able to always have that warm introduction to someone like Rohit, so you don't feel like you have to do a cold email. All right, so any questions from the audience before we wrap up? Sean?
Yeah, so I read recently that one of the most influential things about what makes somebody invest in something is less of the product and the founder than who else is investing. So I'm curious, do you have any recommendations on when we go to do investor outreach, any strategies you might have to not inflate the interest in what you're building, but to highlight it,
So I'll take it, because I raise money also too. So I'm not just a capital allocator, I'm raising money too. And, we just did a first close for Louisiana Impact Fund. It is definitely definitely a factor across the board, because when we were fundraising, they were asking, is this family office in? Is this company in? Is this individual in as part of this? And my recommendation for you, I would cultivate those relationships. And when you get someone who's actually committed to you and investing, who else can we talk to in regards to this? Can you provide a warm introduction, not a cold email, as Rohit said, in regards to, who else do you feel that would be a great investor as part of this? And then also too is I would make sure that actually you get approval from your investor. Let's say you have a large investor and they're investing, it could be an individual or family office. Please ensure that they are fine with you talking about their investing within your company. So that's a key thing. I would, make sure you cultivate that relationship and say, hey, do you mind if I make sure that I give you an update every quarter on how we're progressing in regards to our fundraising round? Because what you'll see is that you'll get traction. Then all of a sudden, at the last bit, they'll come in at the last close as part of this. That's just their style. So, make sure you kind of understand that and kind of get a perspective on how they've done other type of capital placements in the past, which is critical.
I think people on both sides of the table do a lot of weaselly things. So, and fundraising is hard. I believe it, and I try and make it as easy on my founders as I can. There are a lot of funds that say that they're in, but they're really just taking an option because they're not committing to anything. Yeah, I'm in, but you got to get a lead first. What does that mean? What is a lead at pre-seed? What is a lead at seed? Till it's a price round, what is a lead really doing? We're setting a price, maybe an interest rate. They're just there to see if a big fund comes in. Because this is one of the craziest things I had to learn about venture. In a very risky asset class, most of these people are very risk averse, right? So they want to see if Kleiner and Sequoia are coming into your round, in which case, hey, remember me? Otherwise, they're just waiting. And oftentimes they will wait and wait and wait, and you're like, dude, I got the round done. I'm just waiting on your 100K. And you're like, well, who else is in the round? Nobody you know. Sorry, man, I'm out. Right? You have to watch out for weasel. And this is the kind of stuff they do. And they're not wrong for it. But my thing is, if I don't have these sort of if I'm not crazy enough to do this thing today, nothing's changing by tomorrow. I'm ride or die. If you're in my network, we're doing this thing. If I fund you, we're going, I don't care who else is in the round. I don't need anybody else. You'll figure that out. But you also have to, like, as a founder, if you tell me, hey, this fund is interested, oh, like, I don't care. And I know, like, what that means. They're interested is, I met them, had a meeting, it was cool, I had a cup of coffee. I can't tell you, and I feel bad for founders to some degree because they'll say, oh, I'm flying out. I swear, this guy was like, I'm flying out. I got a meeting with A16. Who are you meeting there? Oh, I got a meeting with an associate. Your deal's dead. You have to meet partners. Associates are very nice. I've hired them in the past, but they're not the one calling the shots. You have to get to a partner. Then it's serious. And if so-and-so is interested in my round, doesn't mean anything to me. It shouldn't mean anything to you. Until you close them, until so-and-so invested in my round, it's not real.
Right. We are over time, but we will take just one more question. So keep that in mind. We're over time. We'll take one more question. George, I think you raised your hand first here. So George asked the question, and then each of you jump in.
Yeah, it's complicated, right? I have to see one thing that's true. One thing that makes me believe that there's something here that you can build and grow. It depends what it is. Sometimes it's I have distribution that nobody else has. Nobody else can own this market like I can. Sometimes it's my product is so far ahead of anybody else. Sometimes it's supply. Sometimes it's whatever. It's capital. Like, there's different modes. You just have to have a moat.
Yeah, for me, I just say I would go back to the why you, like why you. If this is a real problem, I promise you that you're not the only person that has ever thought of this problem or the solution. But why are you going to be able to implement this solution and scale it? Why you? That's the thing that you have to be able to be very crystal clear, because as early as we're investing in you. So why you for this solution?
Yeah, George, so like from my perspective and, where we sit in growth and buyout capital, it's not a one thing. We're going to sit down with you over days, weeks, and months to really be able to figure this out and kind of work with you and to figure out is that, hey, do you have what it takes to be successful in the arena to really scale this platform moving forward? So I wouldn't, say that just one thing in that, that pitch deck is just going to close $100 million round and that's going to be the end of the day and go forward. We're going to get to know each other. We're going to establish a relationship and we're going to see if we like you as part of this. And then we'll be able to figure it out kind of moving forward. And then that's the key thing. So don't beat yourself up in regards to this. Got to have that one hook in the pitch deck, So it is establishing relationship and feeling comfortable, with the team and kind of what they're doing and see how they handle things and move forward. So.
All right, I love that. With that, we're going to wrap it up. Thank you so much, panel. Let's give it up for the panel. Super insightful. Love the mindsets of that. All right, so that wraps it up for today for Innovate South. Tomorrow we will kick off with our keynote, Jeremiah Oyang, who will be speaking on agentic AI.